Hey, good afternoon, everybody. Eric here. And yeah, you read that right. It says, pay taxes gratefully. Now, you want to know what that means? Here's the thing. Let's say, for example, that, yeah, I know there's bad glare there. I'm just goofing off in my garage. Man, I had to get up off of my chair for a while. Uh, I am still in running clothes. So, it's been a busy day. But yeah, no whining. This is what I like to do. And so, pay taxes gratefully means simply this. If you're making money and you're making enough money that you have to pay tax, it means you're making money. It sounds like a Yogi Berra thing to say, right? But basically, that's just the absolute truth. Now, let's say, for example, and this happens a lot, helping several people a year. They've started a business and they basically spent a bunch of money and haven't actually outgrossed their expenses. So they threw a net operating loss or NOL for the year. And that can be kind of nice because if you look at it like that and say they were doing something else, um, then say they had that job the first half of the year. And the second half of the year, they were doing the business, but they spent a lot of money trying to get it going, didn't really make enough money to pay for the expenses. So they got the net operating loss for the business, but they got their wages. Well, that NOL is actually going to reduce the gross income. So they're paying less tax and they're probably going to get a nice refund, right? So that sounds really good. But what it really means is that part of the year that they were um, getting their business going, they weren't making any money. So you want to make money, which means you want to pay tax. So you're saying to yourself, yeah, but Eric, you're losing your mind. No, there's absolutely no way you want to pay tax. And by the way, the IRS sucks. And sorry, yeah, I talk to them all the time. So if any of you guys actually get on my news feed, don't take it personally because the people that get on the phone actually help me are very professional and they're pretty awesome. But the IRS and the idea behind it and the whole 16th Amendment, yeah, that sucks, sure. And I don't think they disagree with me. And by the way, they're working their butts off and they're very far behind. I finally got through to somebody on the phone today for like the first time in a couple, 3 months. And I can't talk about what, but I will say that the conversation went very well. And they are making the best effort they can, as are we all. So, but paying taxes with gratitude simply means that uh, money comes into your life, and basically it's a means to whatever else you need to do. If you have families, it's how you feed your spouse and your kids. It's how you keep the lights on in the house and keep your mortgage payments made and all that stuff. So as the money comes in, you should be grateful for it anyway. Okay. Matter of fact, I even got in the habit of actually kind of looking up real quick and saying thank you. You can even kiss the $100 bill when you get it. Though I would not do that now. Do not do that. Matter of fact, you shouldn't do that anyway, even when there's no virus, because God knows where that thing's been. But my point is this: you can at least like do this and say thank you, and then wash that shirt or whatever. Be grateful for the money that comes in, give with a giving heart because money's a river. It's not a dam, but it's a flow. And what you put out, you get back in abundance. And if you can afford to give $10,000 because you make $100,000 a year, that's awesome. But if you can make $100 in donations because you make 1,000, that's also awesome. Because here's the thing: is that money's actually going to come more easily to you because you have a giving heart. And what does this got to do with the taxes that you pay? The tax man is the enemy. Well, let me make this really simple for you. If you are working a job, and most people do, in fact, you guys are the backbone of the labor market, and whatever the unemployment figure is at the time has a lot to do with how many people are out there doing wage earner work. And I'm grateful to you all. Okay, I absolutely am. But here's the thing: is that if you are working for a wage, your taxes come out every single check. the payroll taxes come out, the withholding you set up comes out. You don't have to think about it. You get around to the next year and you have somebody file your taxes, and chances are you're trying to get a $2,000 or $3,000 or $4,000 refund. And I'll talk about why that's a terrible idea some other time. But for now, basically, you should withhold as little as possible and still not owe in April, okay? Because you're making use of your money as you make it. Now, here's what you do if you're in business. You don't have a regular paycheck. You're basically money in, you're making your expenses out. If you've got a good qualified bookkeeper, or if you're good at it yourself, you can keep track of your profit and loss statements and everything. But are you making tax payments? And I'm going to tell you that over half, easily over half, the people that come to me to do their business taxes for the first time do not. So they have $50,000, $60,000, $80,000, $100,000 in income, haven't paid any tax in the previous year. They have underpayment penalties, and they have to come up with the tax on all that income they made all at once. And if they didn't plan for it, they end up on installment agreements. So here's how you can pay taxes gratefully. Do a little bit of carve out of the money that you make on a monthly basis. I'm sharing this out of personal experience. It's my wife Barb and I do this. We have a tax savings account in our personal, and this is a personal thing, by the way. It's not a business expense. Estimated taxes, or 1040-ES, for business people, you only got to do it 4 times a year. 4 times. April, June, September, and January of the following year are your 4 chances to make a payment toward your taxes, so that when April comes rolling around, you don't have that sphincter tightening feeling of, oh my God, where's the money coming from? And Marty, I'm going to answer you after this. Matter of fact, let me read this. Hang on a second. What we're going to do is talk about the last time you filed a return, because if you filed a 2018 or a 2019 return, Marty, you should have had your stimulus check a couple of months ago. We need to actually talk. So I'm going to pop you a link later. And yeah, no problem. What we're going to do is I'll just pop you a schedule link, and let's talk for about 15 or 30 minutes. And I know we're both busy, but we can find a little bit of time. And let me just find out what's going on for you, because I can get you paid, I'm pretty sure. So back on my little train here. And thanks for the question. I like the participation. Oh, good. Then there's another problem. Now, I definitely am really curious. We'll talk. I promise. Swear to God. Here's what Barb and I do. We carve out what we believe is going to be the proper percentage of what we made in the previous month. We throw it into a savings account, forget about it, and then you go on IRS Direct Pay, and you can just type that into Google, and it comes up, irs.gov. A page comes up, blue make a payment button, and in April, and in June, in September, and January. This year, you didn't have to do April and June. They delayed everything till July. I know, because I'm going to get the question. But all you do is you go in there and you set up your estimated payment, and you can actually put that savings account's routing and account number right into it. And you never have to touch the money. You don't have to write a check. You leave the stamps in the drawer. It's the simplest thing in the world. So carve out a little money monthly, make your estimated tax payments, and stop freaking out every April. And the more you make, the more you should be paying. And you definitely don't want to get in a position where you're behind on that, because underpayment penalties are actually going up year by year. It's up to 6% of the tax owed now, and that's substantial. You know, if you owe $10,000, for example, that's another $600, isn't it? Yeah. So why give them money that you don't have to? And if you have any questions, you know how to find me. So last thing before I let you go. This one's getting a little long here, but yeah, I appreciate the dialogue and everything too, so that's important. Here's the main thing that I want to share with you is a lot of why you're paying too much tax may have a lot to do with the way and the character of the tax return that you're filling out. And now I've got some help for you. And in the meantime, I've actually got a second smaller offering, a little book. And I believe I'm going to actually open up the promotion I did last fall. I'm going to be giving some copies away of copies of it away later this week. So stay tuned, because I'm going to let you know when that happens. And until then, you guys have an abundantly healthy day. Namaste. Take care of each other, and